Our guest today is Dr. Vanus James, economist. Dr. James, welcome. Okay, the 2025-2026 Trinidad and Tobago fiscal package is due to be presented in Parliament. The Prime Minister has yet to give a date, but at post-cabinet briefing expected today, the expectation is that the budget would be read on Monday, October 6th. Is Dr. James on yet? Okay, so as we wait on Dr. James, at the beginning of the conversation, we want to put the budget against the backdrop that is our economy. The first backdrop we wanted to look at is the recent downgrade by Standards & Poor for the Trinidad and Tobago outlook. We were downgraded from BBB plus to BBB minus. That is one of the situations in which the government is facing presently, and we are going to talk about what a downgrade by the ratings company does for a country like Trinidad and Tobago and the upcoming budget. After that, the next discussion would be our dependency on oil and gas and how that relates to the budget and how it will affect the type of budget that we will be presented. After that, we will also have a discussion on diversification of the Trinidad and Tobago's economy and who is responsible for diversification, who is able to propel that forward, whether it be private sector or government, and what is necessary to get it done. Yeah. Hi, Dr. James.
I am here.
Hi, pleasant good morning to you.
Morning.
Okay, so we could get right into it. As part of the introduction, one of the things I wanted to start with is with the upcoming budget, looking at it on the backdrop of the economy as it stands. One of the critical things I think we agree on is that Standards & Poor adjustment to the Trinidad and Tobago outlook. Could you tell us a little bit more about what that means for Trinidad and Tobago, but indirectly related to the budget, or related to the budget, sorry?
Yeah, well, first of all, the Standard & Poor's rating is evaluation done by these rating companies on the status of the economy. In particular, what it does is it evaluates where the economy is and the risks that it poses to the capacity of the government to repay its obligations if it borrows. And it takes into account the trends that it could see on critical factors like revenues, the performance of the key energy sector and other key sectors of the economy, and effectively attaches a risk factor to the net cash flow of the Trinidad and Tobago economy, and then it uses that to determine if government is likely to be under any stress when it comes to repaying its obligations, if it were to enter into any of them. And that's what the BBB rating with a negative outlook is all about. So what effectively has happened there is that Standard & Poor's has downgraded the evaluation of the country from that standpoint. The implication of that is that the government will find it more expensive. It will still be able to borrow because a BBB rating is a on the edge rating, but it's not a disaster. So government will be able to borrow, but at elevated interest rates.
And why is this need to borrow so critical at this time?
Well, the state of the economy. The economy of Trinidad and Tobago virtually collapsed under Dr. Rowley. And where you are now is that revenues are down and likely to fall over the course of the year because the key drivers is of two forms of revenues. Revenues the government gets in the form of foreign exchange from the energy sector, and local revenues in the form of TT dollars. And both of those are down. So the economy has collapsed. So domestic demand is falling, and that is putting pressure on businesses, local businesses, retail, and other kinds of businesses like that, and their capacity to meet tax obligations. So that would show up in lower revenues to government, and of course the big trouble that the energy sector is in is also big trouble for government revenues. Oil prices are down. Oil prices today are around $60 per barrel. The budget of last year targeted $78, and gas prices are moderated, but the gas sector is in big trouble because we don't have the supplies of gas to keep the LNG manufacturing process running. And of course, that also affects what happens in ethanol and methanol and all these other exports that we normally do in the manufacturing sector. So revenues will be down, and government will have a lot of trouble maintaining its expenditure profile. It has made a lot of promises and commitments to its supporters, the 10% increase in pay to public servants, the reopening of Petrotrain, a whole series of things like those. And if government attempts to do any of those things, it will have to borrow in order to do that. So that's where the concern is coming from.
But Dr. James, you just made the statement that the economy has virtually collapsed under our past Prime Minister, Dr. Rowley. But for the average person, how do they experience that? Because a statement like that to me says that businesses are no longer functioning, the public service is no longer functioning. But as far as we know, things continue to happen in Trinidad and Tobago. So could you define what you mean by the economy has collapsed?
There was a 23%, 20 to 23% reduction in GDP per capita, that is output per person in US dollars terms, between 2015 and 2024, towards the end of Rowley's term. Now, a 23% collapse is a big thing. I mean,
what is it supposed to
it
be
went
at?
from 18,700 US dollars per person in 2015 to 14,400 US dollars per person in 2024, thereabouts. So what that means is output has been falling. Businesses would be finding that their sales are falling. That would mean either they're going to hold up on hiring or lay off workers. All of that is coming down the pike here right now. On the other side of that, of course, food inflation will be, because the agriculture sector would take a hit from all of that. Food inflation would start up. And following that down the road, headline inflation will go up as well. So you'll feel it when you go to the supermarket, and you're pretty much feeling it right now. When I go to the supermarket to buy things, including medicine, the prices are rising much faster than I expected. And food, of course, the same thing. I mean, 3.3% food inflation is a big hit for poor people. So they'll feel it when they go to the market. And those are the immediate environmental feels that you would get as an ordinary citizen. Down the road, what it also means is government will raise less revenues because businesses will be under stress to meet their VAT commitments, transfer their VAT. If they pay them, then what will happen is they'll collapse. So they will usually not pay them. And the consequence of all that will be that government will find itself under pressure to even lay off workers. So under the cover of all of that pressure, you hear the Prime Minister talking about cutting contract workers. Well, that's a cover for recognizing that government doesn't really have the capacity to maintain the high rate of employment that it has been, just like the business communities. And you find a nice political way to say we'll cut employment.
Okay. The other two areas I wanted to talk about, the budget backdrop, and you mentioned them, the depressed oil and gas prices. And you indicated that the previous budget was pegged at $78, but presently the price for oil and gas, well, oil is at
Oil,
is at $60 a barrel.
60, yeah, about that.
How does, and I don't believe that this was last fiscal alone, it was the fiscal before that as well. So are we saying that the deficits related to the budget are still existing and now has to move into the new fiscal?
Yeah, of course, there will be, well, the government will have had to borrow to operate in the last, but again, it says so in the budget. And so borrowing would have been going on. Government on taking power is to maintain that form of spending. It will have to keep that borrowing program in place. But now what it would find is that with the depressed economy in hand, collections will fall. So whatever you had from the last year that you have to provide for in terms of debt payments and so on, you now have to pile on top of that more debt in order to cover this year's budget. Otherwise, government will have to lay off a lot of people. They will be cutting expenditure all around, and that will trigger a huge economic crisis. So the safest way for the government to go sociologically right now is to borrow and spend the money wisely.
Okay. So do you think it would be possible for a present government to keep some of the election promises they've made? One was a 10% increase to public servants. You talk about the reopening of Petrotrin and a couple other election promises that were made. Do you see some of those still being feasible and being addressed in the upcoming budget?
Well, I myself don't see how most of them are feasible. I don't see how you could keep the 10% commitment. I don't see how, because I don't see where the money will come from to fund that. That's on top of the deficit from the last budget, remember, that we had in the last budget. So how do you fund that? Where is the money going to come from? Well, you'll have to borrow. You'll have to scale up the borrowing. So if you were borrowing 5 billion last year, you may have to borrow 10 billion this year in order to make commitments like those. And you'll have to sell that expanded borrowing to the public. And the Prime Minister has some political capital still in her cabinet, but Trinidad is a place where the patience with economic suffering is very, very low. They're running very thin down there. So I think it's going to be difficult for the government to justify the scale of borrowing that would be needed in order to keep those election promises. You may be better off trying to change up the way we engage with each other in the society so that you could moderate those demands on the promise of better economic programming over the course of the next 5 years. I don't see how those promises could be kept in any credible way.
One of the things you talked about is how government gets revenue. And one of those revenues are tax revenue internally from us as people and businesses. Now, before we get to the point where people may be unable to pay their tax revenues, do you see a way in which government can continue to efficiently collect tax revenue, especially since they have scrapped the TTRNA and have
I
reverted
don't
to...
see that.
Huh?
I don't see that. I don't see efficient collection because remember, you have to refurbish inland revenue. That will now be operating again in a silo. The Revenue Authority was intended to integrate all of the revenue collection arrangements. So you were integrating inland revenue with customs, licensing, all fees and obligations people have to meet will now have been funneled through a centralized administrative arrangement that would be keeping an eye on where the leakages traditionally were. But now you've abandoned that, so they'll have to recalibrate to go back to the old-fashioned arrangements, and that will open the door to the same old leakages that existed before. So I think you're not going to get more efficient tax collection from going back to the old arrangements. That's the first and most important thing. But remember, the reason people don't pay taxes is not because they don't want to pay taxes. It's because the incomes that are coming in are under stress, are risky. And it's the realization of that risk that causes a business to say, well, I have collected the VAT, but if I pay the VAT, I had to lay off my workers. So we'll take a chance and not pay the VAT, run into some trouble with the government, pay the interest down the road, but keep my workers so that I keep my business going down the road here
In
for
the
a little
hopes
while.
that
So
something would
this is
change.
in the hopes that something would change. And in the hopes, for example, that the government would make some announcement that could stimulate optimism in the country and bring demand back to the market.
Okay.